All right, let's get some analysis. Evan Lucas joining us from IG in Melbourne now. Evan, great to see you there as always. Yeah, another record high for the S&P 500. Do you think it's kind of going to go over that 1900 point mark and then come back?
Yeah, certainly could. I think obviously the next 48 hours is going to be very, very important for how the US looks at it. They are moving and are very much a services-based index. So tonight's ISM services manufacturing data will be very, very interesting. It does have a consensus read of a fairly reasonable expansion. So around about 54.8 is the consensus read from Reuters anyway. So that's what we're watching there. And then obviously tomorrow night will be the really big one that everybody's talking about, non-farm payroll. So the ADP number last night, the initial read was relatively good, 191,000. That is good. Was, as you alluded to, a little bit below consensus. One thing I will say, the initial read of the ADP and the initial read of the non-farm payroll since basically October 2012 have been nowhere near each other. So that is something to keep in your mind. When they get revised, they tend to get a lot closer. But the initial read, which is what traders use, never really that close. But what has been interesting is that economists from the ADP read have upgraded their current views of what will happen Friday night. The consensus read is now for 200,000 jobs to be added for the month of March. Now that is a really good step towards moving away from that harsh winter and also moving into a very, very strong second quarter of the year. So that's what people are watching. That's why, yes, I think there's a real possibility if we do get that good economic data, 1900 points is certainly not out of the question of the S&P. There is a lot of excitement in that US equity market, and it probably won't sort of drag off if we get two good reads out of those two prints.
It's just interesting, isn't it, trying to get the psychology of the market at the moment, because, I mean, is it a good read on payrolls, then does that bring forward the first interest rate hike from the Fed, or is it good because the economy's doing well? I mean, how do you read it?
Yeah, that's the question, isn't it? I think what Janet Yellen did on Tuesday night really did push back that whole idea of movement in the interest rate. So the last sort of 3 weeks since her first initial press conference that came in March, which did cause a little bit of volatility, you know, it saw a little bit of rise in the bond market as that got a bit excited by the possibility of rate rises. I think what she said on Tuesday has really pushed that, well and truly away. She did obviously say that, yes, employment is moving in the right direction, but they want 10 million Americans being employed before they sort of really push on that, and inflation sort of back to where they need to see it, which is 2%. Now, inflation is still a long way away from there, so that gives her the mantra that she's moved back to that, not say a considerable amount of time, but actually a substantial amount of time, and that time will be beneficial of the data. So all of that has really pushed back that rate fear rise, and I think it is a bit of an irrational fear. The market had, using the term psychological movements in the market is correct. It has been probably about taking some profit off the table to see what they did to reaffirm where they're sitting with QE, and QE is going to be around for a fair amount of time on that rate side. So we're going to have incredibly low rates coming out of the US until at least the end of 2015. So I agree, good data will be seen as good data, with the idea that the Fed isn't going to react to it anytime soon from the interest rate side. We are going to see them continue to pull out the asset purchase program, and the market has taken that very, very well. So let's hope good news is good news from the US, and we do get those good prints, because it will be a good read for us here in Australia as well. We do need to currently see a real good pickup globally, that consumer confidence is up because the equity market is moving in the right direction, US dollar strength, all of that is beneficial to us back in here in Australia as well.
Here in Australia too today, the focus on the economy again. We've got retail sales, we've got Glenn Stevens speaking. There'll be a chance to ask questions as well after that address to that luncheon in Brisbane. What do you think? What are we going to expect from the RBA today?
Yeah, well, Glenn Stevens has made himself out to be a very shrewd operator when he has these speeches. He is very, very measured. I think he'll be pressed quite heavily on the low rate environment, which him and also Philip Lowe have started to use that terminology quite a lot. We're also talking about housing, and particularly in Sydney, maybe also down here in Melbourne, about the heat that is really getting into that. He will be pressed. I don't think he's going to give a huge amount away. I think he's going to be trying to be as neutral as he possibly can. I think what they were getting out of the statement on what came out on Tuesday was that, yes, that stable environment in the interest rate side was probably going to be around for another 3 or 4 months. I don't think you can probably go further than that, because if we do continue to see green shoots, we ourselves have got our services PMI data coming out from AGI this morning. If that continues to show signs of strength, and we do get maybe over the next 2 weeks when the jobs numbers come out, a reaffirm of what we saw last month, even though it was an absolute staggering figure, that would give him maybe a little bit move towards that hawkish side. So watching that Aussie dollar, it did almost absolutely nothing last night overnight in the US trade. So that will be very, very interesting. His speech will be key. Trade balance today will be also interesting. It'll be the first month we've seen after Chinese Lunar New Year. Now, considering we've seen some slowdowns there, it'll be interesting to see how the iron ore exports went in that month of March and whether or not it actually brings us way back into sort of a normal level. We got, what, $1.43 billion expansion last month. That's something that we haven't seen for a very long time. So just watching to see if that also comes back in with regards to the trade balance. That might be an interesting one. And considering the run we've seen in those materials plays, that may be a bit of a sort of a drag. So that's the other thing to be aware of, is the trade balance. It may sort of normalise on the read this morning.
Okay, and so overall for the ASX 200, what do you think today?
We will get positive. The one thing that is starting to be interesting about the ASX 200, we do look like we're going to point up around about 17 points, so that should jump us into 54, 17, 54, 20. Every time we get above 5400, however, at the moment, over the last week and a half, we haven't been able to really hold it. So that is a resistance level from an index point of view. It's quite interesting that it is almost making a very strong top there. We get through it, but we cannot close above it. So that's what I want to see today. If we can actually hold and close above 5400 points. It's been very, very tough for our market, and there's a lot of data today that may be dependent on that. As I said, the material space has been fairly strong over the last week. If that trade balance is a little bit weak, we may again fail to keep above the 5400 point mark. But it is going to be a positive day, really positive leads coming out of the US and Europe.
Thank you so much, Evan. We'll chat to you through this trading day.
Thanks, Brady.
Evan Lucas there from IG in Melbourne.